Good morning to you, Megan, and thanks for joining us. Interesting markets to start this week yet again. Some talks of things starting to reopen here, maybe sooner than later. How does that shape up for something like Coca Cola, and what are you guys seeing when you're tracking this data on Coca Cola?
So whenever we're listening for Coca Cola, we're listening for consumer purchase intent specifically. So people talking about buying a Coke or, buying a Coke Zero or maybe buying a Smart Water. And we're showing that, demand for Coca Cola products is pacing about 17% positive. So, for 17% growth year over year right now. We did see a big surge, especially in the middle of March, whenever people were starting to, stock up on these quarantine supplies. A lot of mentions of people buying Coke and or buying different Coke products to keep while they're on lockdown. So, we do have that inside of our data. You can see on this chart here, this is what I'm talking about. That green line is that purchase intent of consumers talking about buying Coke products. It's interesting because the beginning of the year, we were watching all these mentions of diet trends and things of that nature. And what we've seen are those diet trend mentions kind of drop off a little bit as we're going into this new, quarantined and lockdown status. And I think that it's interesting that you see, people who are talking about now, buying these Coke products and buying these things while they are on lockdown. So I think that going into earnings, it's really tough because there's so many unknowns with Coke and, how the impact of, restaurants and things of other nature being shut down, how that impacts the, consumers, who's actually drinking Cokes and how much Coke they're drinking. But from just a perspective of, buying for yourself, buying for your home, we're definitely seeing strength.
Yeah, Megan, I think one of the interesting things about where we are, Coke, we talk about Pepsi a lot on this show, and you can make a case that Pepsi's got a lot of food, right? It's got Frito-Lay, it's got Quaker Oats. There's a lot of food there. Coke is a liquid company, right? Everything they do is pretty much liquid. And if you look at their portfolio, it's vast. It covers everything, right? It covers Minute Maid orange juice. It covers Dasani water. It covers vitamin water. Obviously, Coke and Diet Coke, that you try to tell someone you got to take their Coke or Diet Coke away and they will scratch your eyes out. And by the way, everyone has saw what's happened to alcohol sales during this period. And let's face it, Megan, no one has ever ordered a rum and Pepsi.
Yeah, you're exactly right. When we look at Pepsi, we are seeing a really similar trend in terms of an uptick and, an increase year over year for consumer demand. But we're seeing strength in all of the Eatos, all of the Doritos and Cheetos and things of that nature that people are consuming while they're quarantined. So I think you're right. It is kind of a tough, you're not really comparing apples to apples whenever you're looking at Coke and Pepsi. But what we are seeing from a brand perspective in Coke is that people are still buying, they're buying the Coke Zero, they're buying the smaller cans of Coke, their strength in fused teas. They're coming out with, or they just launched a new sparkling water product. So that's something that we're definitely watching moving forward, that, Coke isn't just the sugary drink Coke. While that's still popular, you have these other options that are a little bit more health friendly, you could say.
Megan, I spent a lot of time this morning trying to figure out what percentage of Coca-Cola's sales goes to like restaurants and bars. And I had a really difficult time finding anything of use. McDonald's, I found, is a very large portion of it. But what I did find was 60% of non-alcoholic beverages in the U.S., I believe it was, breaks down between a Coca-Cola or a Pepsi product. And of that, 40% of it was Coca-Cola, and 20% of it is Pepsi. So to Kevin's point, Coca-Cola definitely has a stronger stranglehold on the beverage market. But if I was going to then take a step back and try to think to myself, what probably of both food and snacks, the Eatos, as you called them, Megan, and of Coca-Cola and Pepsi, the beverages, which one is probably more exposed to restaurants? I would say the beverage side is. Bars and restaurants is, serving soft drinks. The Fritos and the Doritos, probably more people buy them at a store in terms of percentage of those sales. And so I didn't actually find those numbers, but I think that's the most important question to try to figure out is clearly your data is strong in terms of the consumer going and buying these products, but is it going to be enough to offset the destruction that their revenue is going to face from, everything being closed?
Yeah, I think that that's what everybody's going to be watching into this earnings is what is the impact. Originally in February, I think they said, oh, EPS might be impacted by 1 to 2 cents, and then they kind of retracted that and said, okay, they pulled their guidance, and so just because of the impact in Europe and the U.S. So I think that that is an unknown. I kind of went on the same hunt that you did to see, what is the breakdown of restaurants to just consumers buying at home, and it's really tough to nail that down. So I think it is positive that we're seeing that consumers are, stockpiling these Cokes, that they're buying these products for their own home, but that's going to be really tough to estimate, what the big picture impact is from restaurants being shut down pretty much globally.
And Kevin, I want to pull you back in here because I think Megan also mentioned earlier another very interesting point on kind of these diet trends taking, a back seat during this quarantine phase. And obviously with more people buying these products for their homes, maybe some of these trends that were working against some of these companies for part of their markets may either pause or reverse in the long term. I don't know if you have thoughts on that or anything to add on this overall conversation, Kevin, or any questions for Megan, but I think there's a lot of moving parts here that you can spin both positively or negatively.
Yeah, all I can say is people change their behavior when they're thinking about, oh, I'm going to get more healthy, I'm going to do this, or they're thinking about survival and hunkering down for the long term. I imagine, guys, there's a fair amount of comfort food being consumed, both food and beverage in terms of, so I think these companies like Pepsi and Coke, they're going to turn out to be winners. And Pepsi's portfolio is vast. I mean, they've got every liquid covered, basically, guys. Everything from Coke and Sprite and Diet Coke and Coke Zero, like Megan mentioned, to Minute Maid orange juice and waters. And Megan mentioned iced tea. They have Gold Peak iced tea. So they have every single possible thing besides alcohol. They have pretty much covered. I mean, Schweppes tonic water. So they're the mixers. If whatever you drink alcohol with, they've got that too. So they've got a vast portfolio that's got pretty much all of this covered, guys.
Yeah, and Megan, it's an iconic brand, undeniably, probably one of the strongest brands in terms of recognition that there is. And we talked about how difficult it is to kind of find, what percentage goes to restaurants. Well, makes it even more cloudy is a lot of those restaurants are still open. So McDonald's is obviously one of their stronger partners. McDonald's still open. So it just makes it very, very cloudy. But the stock is basically mid-range in terms of this move. It traded over 60 before this, traded all the way down to 36 and some change. It's $47, $48 right now, basically back to where it was at this time last year. So you basically erased 52 weeks worth of capital appreciation. Going into this earnings release, does LikeFolio have a lean one way or another? Or are you looking for a little bit more transparency before you guys jump in?
Our earnings signal, whenever we look at, how we're playing this earnings, it's pretty neutral for Coke. I think that cloudiness, like you mentioned, really goes into that. But I think that, prior, we've talked about these blue chip value companies. We've talked about companies that previously had really strong demand and that we think that could come out as a winner, as Kevin mentioned. And I think that, Coke is definitely, it's showing strength in consumer demand. Our data is definitely showing year over year strength. So from a long-term perspective, you can see this quarterly bar chart, what the demand for Coke products is in the current quarter that we're just a few weeks in. And, that's really positive. So I think that this might be one that you may take from a longer term perspective to try to get into. But from an earnings perspective, it is just a little bit cloudy. We're pretty neutral.